How you doing, everyone? You know, life insurance is one of the most important financial decisions that you can possibly make. You have to get life insurance to protect yourself and, more importantly, to protect your loved ones and protect your legacy. And it is a very wise decision as part of a wise financial strategy. And it is a very wise strategy as part of your financial life. So, we're going to get into a little bit about different types of life insurance in this series. And today we're going to talk specifically about term insurance and why term insurance is an invaluable resource for you. If you do not have your own life insurance policy, specifically a term policy, you're missing out on some key benefits. So I'm going to go over what some of the differences are specifically between term and whole life or universal life. My name is Angel Abundis, and I'm with America's Financial Group and Associates. And we represent some of the nation's leading financial services companies, some of the top, most reputable, highest rated insurance companies in the market. And we have some amazing products that we can help you with. But one of the key things that we always try to teach our clients and that we consider our family is that having your own life insurance policy is an absolute necessity. You never know when the inevitable might happen. And so being financially prepared is going to help you. And being prepared is going to help you. So, having term life insurance, having any life insurance really is essential. And there are some key differences between whole life, universal life that follows you through your entire life, which is why it's considered whole life, with term insurance. Term insurance is life insurance for a specific period of time, a specific term. Now, the most common term policies that you'll see are 10 years, 20 years, or 30 years. But there are others out there. You might see a 5-year, might see a 1-year, but most commonly you'll also see 15 years or 25 years. And it is essential that you get life insurance early. If you don't have your own life insurance now, let's say you're between 20 to 40 years old, you should go out and get a term life insurance policy today. Don't wait, because the longer you wait, the more expensive it gets. If you're a young millennial, let's say you're 25, 30 years old, you should go get insurance right now. You can get a 30-year policy and it is going to be relatively inexpensive. Now, if you wait until in your 40s or 50s, the cost is going to go up. And the longer you wait and the older you get, the more expensive it's going to be. So it's imperative that you get insurance now. Now you might say, well, I already have insurance through my work. No, you have to get your own policy. Because if something were to happen, if you were to lose your job, or if you were to go to another job, that term insurance or that life insurance that you have with your employer is not going to follow you. And let's say now you go out and let's say your new employer doesn't offer life insurance as a benefit. Then you're going to have to go get your own policy. And if you waited too long, let's say you've had some medical issue or something, that could impact the amount that you pay. So getting insurance early while you're healthy is important. So let's say you're a 30-year-old female and you get a $500,000 policy for 30 years. I mean, it could be relatively expensive. Let's say $30 to $40. So for about $1 a day, you could have a $500,000 policy. Now, let's say you have kids or you have more dependents or someone who depends on your income, then you might want to make sure you get more coverage. So it's important that you get it now, because that same policy that you get when you're 30 years old is going to probably cost you an extra $10, $20, $30 more a month if you wait until you're 40. So it's imperative that you get your own policy and get it early. And, one of the things that you want to also do is evaluate your insurance needs every few years. At the very least, every 5 to 10 years, evaluate if the insurance that you have is adequate. Because let's face it, let's say you get a policy right now, let's say you're single, you don't have any kids, you get a policy for, let's say, $500,000, but now 5 years later, 10 years later, you're married and you have, 2, 3 kids or something. Your needs are going to be drastically different. And you want to make sure that you have enough to cover, let's say, paying off a mortgage that you might still owe some money on, or preparing to pay for your kids' college. And let's face it, college expenses are going up every year. So having adequate coverage is important, because the last thing you want is to not have enough in case something were to happen. So let's take that same scenario. A 30-year-old female, 10 years down the line, let's say they're 40, they have 4 kids, and the kids are getting older, they're getting ready to go to college, and let's say something were to happen, that $500,000 policy may not be enough to cover the mortgage on the house that they own. So you want to make sure you have enough to pay off that mortgage so your spouse and your kids are taken care of. and also that you have some left over for the kids' colleges. So maybe you want to, up your coverage every 5 to 10 years and see if that's adequate. Or maybe if you want to reduce it, you can also do that too, which we don't really recommend. Now, one of the other things that you also have to think about is the companies that you work with. Now, because we're a broker, we're a national broker, we represent many different companies, some of the highest rated insurance companies in the world. And these companies that have trillions under assets. So it's important that you work with companies that are reputable, that have good ratings, that you know are going to be solid, that they're going to be there if and when the inevitable does happen, that they're going to be there to pay that benefit to your family. And you also want to work with companies that offer other benefits, along with not just if you die, but let's say living benefits. Now, these benefits are very specific, and certain companies offer more than others. So there's one company that we work with that offers 4 different types of living benefits, which means besides you getting money, or your beneficiary is getting money if you die, there's also these other benefits, like if a terminal illness. If you get diagnosed with a terminal illness, let's say the doctor gives you, 12 to 24 months to live, you could go file a claim and you can receive some of that death benefit right now. So let's say you have a $500,000 policy, they could pay you out, let's say 80% of that, $400,000 right now while you're still alive. And you can use that money to help set up your family while you're still here, or maybe you can use that to, better your quality of life in your final years, that time that you have remaining. Maybe you can use it to go, do some experimental treatment or somewhere else. So, something that you may not have the money for, that your health insurance doesn't cover. So you can use those benefits now while you're still alive. And it's not just if you're diagnosed with a terminal illness. You can also, if let's say you get sick, right, and you're not going to die, but you might have some health problems. And let's say it's a chronic illness. Let's say you can't do 2 out of 6 daily functions, like you can't bathe yourself, eat, can't walk, you can't change yourself, or you have incontinence problems, or whatever that is. If you can't perform 2 of 6 daily functions, you can receive money every month to help you while you maybe have a live-in nurse or something like that. Or also a critical illness. Let's say you get into an accident or something like that and you get critical injury or critical illness, you can receive insurance proceeds today while you're still alive. And so those are some of the unique benefits that some of these policies offer. So it's important that you evaluate your needs, that you speak to a reputable insurance broker that represents many different companies that can help offer you the best plan for your specific situation. So these are just some of the reasons why term insurance is very important. And because it's so low cost, the idea is that you buy a low cost insurance, and that instead of buying a more expensive whole life policy or a universal life policy, you can use that difference to invest it, to be saving in your 401ks or IRAs, and using that money wisely to grow. So it's as part of a holistic financial strategy for your specific situation. It's a very important thing, and it's an essential strategy that you must implement to help you prepare for the inevitable. And so term life insurance here at America's Financial Agency is just one of the many benefits that we offer. If you need help with any kind of insurance needs or maybe real estate needs, we have many different resources that can help you. Reach out to us today. Let us know how we can help, and talk to someone that can guide you to make wise financial decisions for you, your family, and more importantly, for your legacy. So with that, thank you very much. Stay tuned. We're going to have more videos coming your way. Have a good one, everybody. Goodbye.